Good evening and Happy New Year. Welcome to the ShadowTrader Video Weekly for Sunday, January 1st, 2012. What's about to follow in this video are my predictions basically for the first quarter of 2012, where I see the S&P going, and then I'm also going to talk about my outlook for gold in the new year as well, and also the dollar. Basically what you're seeing here is the same chart that you see in the Ask the Shadow section of the weekend update. So this is going to be kind of a video version of that. And what I think is going to be happening in the new year is I see the market is higher and then much lower. Basically, I've drawn these three trend lines here that I think are going to be very important. Right now the market is kind of stuck in a range, but I believe it's more bullish than bearish, as we're sitting right up at the top of this trend line and sitting at the high end of this range and not coming in at all thus far. Also, the pullback to the lower trend line here didn't happen. Instead, we pulled back right to a Fibonacci number here as we came in, and then rallied hard off of that without coming a little bit lower to the trend line, kind of fooling everybody, in the process. Myself as well. I was not short, but I will tell you that I was looking to be long at the trend line. I didn't think the market would turn ahead of the trend line, and it did. And since then we had a pretty strong rally, and we've just been consolidating that rally. So what I foresee happening into the new year is a break above this trend line, which is going to take the market here to a much longer term dominant trend line here from the June highs. And I'll switch this to a weekly as well so you can see that. See here from this high here. Actually, it's April, excuse me. It's actually April of, or May of 2011 here, right? Which was the high, which is essentially the high point of 2011. And you can see that that comes into here with July and brings us right into here. So my target for the S&P for 2012 is going to be really just this 1300 to 1325 area, and then I think the market is going to come back down pretty hard, and my goal is to get short in this area and then hold the short with a break-even stop and hold as long as possible, because I do think that these could be the highs for the year. Right now, however, as this is all developing, we have a lot of what's called overlapping value. So now now that I've given you my prediction of what I think is going to happen, I also have to give you the caveats, and this is all listed in the Ask the Shadow there, of what will probably happen also as this develops. First thing is, remember, we have not yet tightened this triangle to a point here. Therefore, these two lines need to converge, and the market could easily sell off hard, move around within this range before it does move higher. Okay. Secondly, if the market closes at any point here below this 1200 on a daily bar, preferably on a weekly bar, okay, then we have to assume that it's not going to play out as expected, and we're not going to get a higher move. We're just going to get either chop, slow grind to the downside, or or even possibly even a hard move to the downside, as investors might be, react with more fear to a close underneath 1200 in the market. So we shall see. But for all intents and purposes, I don't see that happening right away, or at all really, until we see a move up to here. The other thing I want to mention is that if my thesis here is correct and we move up to the 1300 area, we need to watch very carefully to see what nature the pullback is going to have. Markets generally do not turn in a V-shaped formation. Sometimes they do, like here, but this is actually very rare. The topping process, as is the bottoming process, is very ugly. One of the phrases that I like to use, that I remind myself of on an intraday basis when I'm looking at the ES and I'm trying to catch a move off the bottom, is that bottoming is an ugly process. Well, topping is also an ugly process. That means that you probably won't get something that looks like this. You'll probably get something more that looks like this, and then you have the move down, right? So you can see this is kind of like a big diamond formation. So that's what I'm going to be looking for at that 1300 level. Okay, so we shall see. All right, what's going to play into this a lot is also going to be the dollar, and that's going to lead me into the end of the video here with gold. Dollar is extremely strong right now. And if the market is to move into that 1300 area, at that point, and we start to come in, we could see a spike in the dollar much higher, which would obviously bring the Euro USD down to parity. It's currently at 129 right now. When I say parity, it could fall as low as $1. This would be bearish for U.S. stocks, essentially. And one of the things that obviously this affects the most is the GCs. Now, I have drawn the longer term trend line here, which is the same one that we've been talking about for a while. And let's just delete that. And that is currently coming in at just under 1400. You'll note that today, I'm recording this actually on Friday, December 30th in the evening. You can see we had somewhat of a bullish day, but I really look at this as more of just a dead cat bounce. And although gold could be stronger in the near term, I don't foresee us breaking the downtrend just yet, which is all the way up here. Remember, gold won't change trend until it's well over 1700. So I think that another small leg down is going to happen probably to this 1500 level. I will be a buyer there. However, I will be keeping my stop very, very tight. I will not give it any leeway. I think that gold will move well off this trend line to the upside, but again, it could be also a false start. One of the reasons I say it could be a false start would be what I just said about the dollar, is that if there is further and further euro weakness and greater dollar strength in 2012, then be aware that gold will not be able to shield itself from that. It will not be a safe haven against a strong dollar. It will obviously be just the opposite, okay? And keep in mind that if you look here on a monthly, right, when the markets were crashing in 2008, which is the big move down, look at here, right? As the market really started getting geared to the downside, right? The dollar rallied hard, and when did the dollar top out? The dollar topped out in March of 09, which is at the same time as equities bottom. So if we see a move in stocks in 2012, as I'm expecting, which would be a move down off of this area, right? Rally to like the 1300, maybe another 40 to 50 points higher, and then fall down. In that come down, we could easily see this DX go up, and in that case, gold could be lower, and that could also bring gold well below this ascending trend line that I'm thinking, and then gold would have to find support somewhere much lower, maybe in the 1350 to 1200 area. I don't know. For now, I'm just kind of taking it as it comes, and I'm looking for the move off of this trend line, which I think is going to occur as a playable bounce off the 1500, and then take that with a tight break-even stop as best as possible. Take whatever is possible out of it. If it continues to rally, breaks the downtrend line, then stay with it. But again, keeping a break-even stop and taking some off the table as it rallies, and just kind of taking it from there. If it breaks the downtrend line in that move off the 1500, then great. Then you can always add to the position. But we shall see, because obviously the dollar index here is going to be the kicker. As I was just mentioning, is that it's very hard to say, or I should say, it's very, very hard for gold to rally as this stays strong, because obviously they are inverse. Okay, so let's just recap what I'm thinking here. Again, in the SPX, we are definitely in a very, very tight range. There's a lot of overlapping value over the last couple of days, so it's not really giving us a clear signal. But in the near term, I would say it's bullish, because obviously the hard move up here from the 1200 lows has not been, has not given to any selling, right? There's not been any real selling going on. This day right here, which was the 28th, was really nothing more than a liquidation break off the open in the ES. That's another concept that I'll be talking about more this year that deals with market profile and whatnot. Some of you that watch my YouTube videos on ES trading, you can see me talk about stuff like that. Generally, liquidation breaks like that are met with buying soon after, and you can see what happened the next day. It just got taken right back out, and we're right back where we started, basically. So that is the way I foresee the markets playing out into 2012. One last chart I will leave you with is the monthly. You'll notice that in the analysis that I talk about in the Ask the Shadow column, I do make mention of this monthly chart here, which clearly shows that you have two bottoming tail hammers on the monthly, which are bullish, and the ranges are not very large. The market for the entire year, as we know, didn't really even move much, right? I mean, here's your open in January 1st of 2012, which was 1257.62, and notice here it's 1257.6, so we closed dead even actually for the year. However, for the 2 months which just passed, we have clearly made a higher low, right? Market has reversed hard off this 1060, and the low for December was definitely higher than the low for November. So that's why I'm thinking that we see some follow through here off of this pattern, but I do think that it will be short-lived. I think that the target area is here in the 1300, 1325 area. Be looking for a short there, and then, like I was saying, remember, topping is an ugly process, so it could spend some time there, making some lower highs, backing off, backing and filling, and then much, much lower, closing 2012 much lower. All right? On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.